Hello everyone and welcome to Grade 11 Accounting. Today we're dealing with partnership accounts, but specifically the notes to the balance sheet. What we are going to do is we're going to compare how the transactions from the general ledger appear in the notes to the balance sheet. So we're going to take an activity and enter it both into the general ledger accounts as well as the notes owner's equity in the balance sheet. All right, so let's look at this activity. The following balances or totals appears in the books of Axelrod Stores on the 28th of February 2020. So that is the end of your financial year. The partners are Alex and Rob. And then they give us the information. Some of it is opening balances indicated by those dates. If they don't indicate a date, then it means it's the 28th it's the end of the year, as well as the profit and loss. Then they tell us that no entries have been made of the following transactions. Rob registered his personal truck in the name of the partnership on the 1st of September and requested that this be regarded as an additional contribution. So this is additional capital contributed and it is not included in his opening balance. Also, Alex withdrew 20,000 Rand of his capital. So that is also not included in there. He reduced his capital. It's very important to note that this is a capital withdrawal and not normal drawings. So it's not included and we should not include it in normal drawings. It's part of his capital. So it's a withdrawal and an additional capital. And then it's our partnership agreement. The partners are entitled to monthly salaries, but remember, when we record these general ledger accounts, we record it at the end of the financial year, and therefore you would have to times it by 12. Rob is entitled to a bonus, and interest on capital must be provided 15%. Okay, and then the balance of the profit and loss must be shared in the proportion to their capital balances on the 1st of March, in other words, their opening balances. Right, now the first thing we do is we record our opening balances. So let's start with capital. These are all owners' equity accounts and therefore these are minus plus amounts. So our capital opening balances, our opening date is 2019, March the 1st. We record balance brought down. And for Alex, it's 300,000 because none of these transactions was included in there. And then we do the same thing for Rob. Balance brought down of 200,000. All right, now we're going to enter the opening balances into the notes to our balance sheet. All right, so opening balance for Alex is 300,000 and the opening balance for Rob is 200,000 and we add the two together for our total at the side. Okay. Now we record the additional capital and the withdrawal of capital. So Rob added capital. So if we add to capital, it would have to go to the credit side of the capital account. So on the credit side of Rob's account, what is the date? It happened on September the 1st. We added, but we didn't add money, we added a vehicle. So we recorded as vehicles. It would be recorded in the general journal and the value of this vehicle is 140,000 Rand. And in addition, in the notes for Rob, we then have an additional 140,000 and we include it in the total as well. We then record the withdrawal made by Alex. So if he withdraws capital, it goes to the debit side because that's the negative side of our capital account. And we record the date. It happened on the 1st of September. He withdrew cash, so the contra account is bank. Would have been withdrawn from the CPJ and it is 20,000 Rand. And a withdrawal of capital must be indicated by brackets. you need to show that you subtract in the note. And then you subtract it from the total. Right. All right. So the only thing that remains is to now balance both your general ledger and your notes to your balance sheet. So let's start by balancing capital account for Alex. 300,000 minus 20,000 would give you a balance carried over of 280,000. And we do our little total lines to give us the 300,000 in the total lines. And then in the next financial year, we will start 2020, March the 1st, with a balance brought down of 280,000. For capital, because both amounts appear on the credit side, we could just add those two amounts together to give us our new opening balance of 340,000. And then for our notes to our balance sheet, the 300 minus the 20,000 for Alex will give you 280,000. And for Rob, the 200 plus the 140 will give you 340,000. And then you add from top to bottom for the total, which gives you 620,000. And then you just double check from side to side so that you ensure that you get the 620,000 again. Right, so that is our capital note and our capital accounts. Now let us move on to the current account notes and the current accounts in our general ledger. The first step that we need to do when we record it in our current accounts is we are now going to enter the primary distribution. So that is what the partnership agreement states: your salaries, your bonuses, your interest on capital. All right, current account is a minus plus account because it is an owner's equity account. We do start with the opening balances in our current account as well. So if I do look at the information again, the current account, Alex had a credit balance. That means it's a positive balance. And Rob had a debit balance, so he had a negative balance. He actually owes the partnership money. So let's start by entering those amounts in here. This is opening balances, 2019 March the 1st. Balance brought down. And for Alex, it's the 14,000. And whoops, an extra zero. And for Rob, it's on the debit side because it's a negative balance. And that is the 4,500. Let's enter those opening balances in our note. When we transfer those opening balances in the note, that refers to the retained income at the beginning of the year. So at the beginning of the year, Alex had 14,000 Rand and Rob had a negative, and therefore the bracket, 4,500 Rand. All right, so let's now enter their primary distribution. In other words, their salary, their bonuses, and interest on capital. So remember what I said? The salary is an annual salary. This happens now at the end of the financial year. So our date is the 28th of February. It's recorded in the general journal. So what we need to do, Alex, 28,500. I need to times it by 12 because they've given me monthly salaries. And Rob, 23,000 times 12. So if I do that calculation for Alex, it would give me a salary of 342,000 Rand for the year. And for Rob, although his opening balance was on this side, his salary is still an allocation to him. So the salary for Rob would also be recorded on this side. And his salary would be 276,000 for the full year. All right, then they go on and they say that Rob is entitled to a bonus of 60,000. So let's record his bonus. Of 60,000. And let's record both these amounts in our current account note as well. So in the current account note, we start with the salaries. So the salary for Alex was 342,000. And for Rob, it's the 276,000. If I add those two amounts together, it will give me 618,000. And then the bonus for Rob is 60,000. Alex is not entitled to a bonus, so it's just the 60,000 for Rob. Now we get to the interest on capital. Now it's important to note that if the capital changed in the year, we had a change in capital, then we need to calculate the interest for a part of the year before the change and then a separate calculation after the change, and then we add those two amounts together. All right, so let's start with Alex. Alex had an opening balance of 300,000 Rand. But Alex changed his capital on the 1st of December. So now we will count months. From the 1st of March, so it's March, April, May, June, July, August, September, October, November. For 9 months, he had a capital of 300,000 and the interest rate is 15%. And then he reduced it to 280,000. So for the remaining 3 months, Alex then only had 280,000. So let's do the calculations for this. For that, if I do that calculation, it will give me 33,750. And if I do this calculation, it will give me 10,500. I then add those two amounts together to give me Alex's interest on capital. And I can record it over here, 44,250. And I record it in Alex's account. Interest on capital. In the general journal, the 44,250. I now do the exact same thing for Rob. He started with 200,000 times the 15% interest. When did he change? When did he add the 150,000? On the 1st of September. So for March, April, May, June, July, August, not September because it's the 1st of September. So for 6 months, I need to calculate on 200,000. Then he added 140, so then he had 340,000 for the remaining 6 months. So if I do that calculation, it will give me 15,000. If I do this calculation, it will give me 25,500. Added those together, and it will give me a total of 40,500, which I then record as his interest. Whoops, I recorded this the wrong way around. 60,000 was the bonus. 40,500 is the interest on capital. And 44,250 is the interest on capital over there. And I then record it in his current account as well. And that's the 40,500. Sorry, let me just fix this. The total for the bonus was 60,000 and the interest on capital I now add these two amounts together to get the total of the interest on capital for both partners combined, and that is 84,750. Okay, all of these amounts also needs to be reflected in our appropriation account. So let's just quickly transfer or close off the salaries, the bonus and the interest to our appropriation account. This is also at the end of the financial year. So we have our salary for Alex and the salary for Rob. So Alex's and all of this happened in the general journal. The 342,000. Rob's salary of 276,000. The bonus of Rob of 60,000. And interest on capital must be added together. It just has one account. So I'll do a bracket calculation for the 44,250 plus the 40,500. So added together, the interest on capital is 84,750. Right, so that was the primary distribution. What I need to do next in the notes is I just add them together here as totals as well. So I add these two amounts together to get to the answers at the bottom. So I just add everything in the block. So the 342 plus the 44,250 will give me a total of 386,000. The total of those three amounts added together gives you 376,500. And then as a test, we add these two together to get the total 762,750. And then we add those three together and it should give you the same. So it's a bit of a cross-casting just to double check your answers. Right. The next thing we do is we record the net profit as per income statement. So that's our net profit, our profit and our loss. That was the 954,000. So when I recorded that in my general ledger, it goes to my appropriation account on the credit side. That's the profit that I have available to share. That's my split. So this comes from the profit and loss account in the general journal, and that was the 954,000. All right, and then in my note, it is recorded there as the total. And please make sure you can't fill this in yet. It's almost like a circle of life. We start here, work back up, and then we work back there. So we start, we come back down, and then we come back up. All right. So you can't fill this in yet. This is one of our later steps. All right. Now, to calculate the final division of the profits, what we do is we take our net profit as per income statement, so this amount, and I subtract my primary distribution. Because what is the final division? The final division is the leftovers. The leftover money can then be distributed amongst the partners. So I need to calculate what is left over. If I do it in my appropriation account, it is the 954, this amount, minus all of that. That's the leftover. So this minus that. Okay. So in here, this minus that. In here, I actually recorded over here. So the answer of this minus this will give me the final division of profit. Final division of profit. So this leftover amount is 191,250. And this is the amount that you now split between the partners. So this minus all of that will give you that same answer. That's now the amount that you need to split between the two. All right. Now, there's two ways in which you can calculate it, because they said the balance must be shared in proportion to their capital balances. Now, it depends on the activity. Sometimes they tell you it's an equal split. Then it's easy. You just split the amount or just divide it by 2. Other activities will give you a ratio. They will say, split it in the ratio of 3 to 2. Then it means that the first partner mentioned will get 3 parts of it, and the second partner mentioned will get 2 parts of it. The last method of splitting the profit is the one that we're using here, whether it's according to their capital balances. Always check which capital balances. In this case, they said opening balances. So that's easy. Now, what's nice about this activity, if we look at that, it already gives us a ratio, a 3 to 2 ratio. That's one way of calculating it. An alternative way would be to calculate what percentage each partner has. All right, I'm going to show you both methods. You apply the one that's easiest for you. So if we look at it as a ratio, a 3 to 2 ratio, then it would mean our ratio would be, if we have the ratio format, then it's Alex to Rob. Alex gets 3 parts and Rob gets 2 parts. So that gives us a total of 5 parts if you add that together. So now we take the 191,250, and to get Alex's share, I say he gets 3 of the 5 parts. So basically I divide it by 5 because there's a total of 5 parts. He gets 3, and I times it by 3. That then will give Alex 114,750. And for Rob, he gets 2 parts of the full amount. So I take the amount that's left over and I times it by 2 over 5. A total of 5, those two together is 5. He gets 2 parts of that. So he gets 76,500. You can almost compare it to splitting a pie. There's 5 parts in this pie. Rob gets 2. Oh, my pie is not very equally distributed. But Rob will get 2 parts and Alex will get 3 parts of the pie. All right, the alternative method is just to use a percentage. So what we say is we look at the total capital, 300 and 200,000. So we say 300,000 plus 200,000 gives you 500,000. So in total, the 2 partners together have 500,000. So we calculate the percentage that each partner has. So Alex has 300,000 of that 500,000. So to calculate it as a percentage, I times it by 100 over 1. And that will give you 60%. So if I now calculate his actual value of money, I say the 191,250, and I times it by 60%, or 60 over 100, and that will also give me the 114,750. I do the same for Rob, or I could even say, if I don't want to do that much of a calculation, my apologies, I can even say 191,250, because if Alex gets 60%, Rob will get 40%. Minus the part that Alex gets gives me Rob's amount of 76,500. So this is Alex and this is Rob. Right. If I had to record this now in my appropriation account that we have done in the past, this is what we then refer to the amount that's going to go to the current account. So I will say current account for Alex and current account for Rob. Both would be recorded in the general journal. And then Alex has 114,750 and Rob 76,500. This then all adds up. I do apologize, there's a line missing. This then all adds up to the 954 and it closes off this account. Because I now transfer this back to their current accounts, and that's their final split of the profit. So I then record this in the appropriation account. $114,750, and from the appropriation account, $76,500. To record it in here, I just record it in their final division of profit sections. So the 114 that Alex is getting and the 76,500. And then you can check it needs to add back up to the 195. So we started here with step 1. We then added all the totals. Gave us this answer. Then I recorded the net profit over there and it gave me this answer, and now I'm splitting this answer between those two. Let's call this step 5. The next thing we now do, we're not going to do anything in the general ledger with this step. What we do now is we now add these two amounts together. The primary and the final distribution, and I record the answers at the top, because that now is how the full profit is split. So the primary and the final distribution for each individual added together, you record the answer at the top. So if I do that for Alex, those two amounts added together will give me the answer at the top for Alex of 501,000. And I do the same for Rob. Add these two amounts together, final and primary, gives me the answer at the top of 453,000. And then to check that you were working accurately, if you add these two amounts together, it should again give you the 954. That's why I said it at the start. It's almost like a circle movement. You start here, work your way back down, and then you come back up. All right. So it was primary plus final to get to the net profit as per income statement. All right. The next step then is to record the drawings for the year. So the drawings, Alex and Rob. Remember, this is normal drawings. It's different from the capital withdrawal. A capital withdrawal goes to capital. This is normal drawings. So normal drawings reduces your owner's equity account. So it goes to the negative or the minus side of your drawings account. It happens at the end of the financial year. So 2020, February the 28th. It's the drawings of Alex. And yes, you need to write the name every single time, because that is the full name of the general ledger account. 376,200. And then the drawings of Rob was 456,250. And then we record the same drawings in the note. Remember to put it in brackets, because that's how we indicate a minus. So the drawings for Alex, 376,200. And the drawings for Rob, 456 250. And again, here we do need to add those two together to get the total. So the drawings total of the combined partners is 832,450. All right, now we need to balance our current accounts and basically balance the current accounts as well. So if we do balance the accounts over here, all right, we add everything on the credit side together. For Alex, that will then give us 515,000. I subtract his drawings and it gives me a balance carried over of 138,800. So next year, March the 1st, my balance brought down would be 138,800. All right, next we need to balance the current account for Rob. Now just be careful with Rob. He started with a negative balance. If we add his allocations together, even if we just want to look at it over here, Rob received 453,000, but his drawings is 456. So he withdrew more than what he was actually allocated for the year. So that means he didn't come out of this negative balance. He is still in a negative balance. He still owes the partnership. So if I add the debit side together, it would be more than my credit side. So his balance is going to be on the wrong side. So again, my apologies because I've left out a line. He will actually have a balance on the opposite side. So if I add his debit side together, it gives us 462,750. If I then subtract everything on the credit side, it will give me a balance of 7750. So next year, 2020, March the 1st, my balance brought down would be 7750 on the debit side, meaning he's got a negative balance. All right, now we're done with the general ledger accounts. We just need to finish the last bit of our current account note. The retained income or loss for the year, this is how we calculate that. We start the net profit as per income statement. Let's call this A. And we subtract our drawings, B. So A minus B. The net profit minus the drawings. That will give you the retained income for this year. So the net profit that Alex was entitled to, the 501,000, minus his drawings, will give me a balance or a total of 124,800. Rob, remember what we just said, he withdrew more than what he was entitled to. For this year, his share in the profit of the partnership was 453,000, but he withdrew 456,000. So he now has a negative balance of 3,250. These amounts refer to this year. So what they received for this year and what they withdrew in this year. All right, and then our total at the end. Now, because it's a negative, I'm going to subtract those two amounts from each other. It will give me a total then of 121,550. Our opening balances was recorded quite early on. I now subtract those two again from each other to get the opening balance over here. And now I need to calculate the balance at the end of the year. So to get the balance at the end of the year, I use the amount, let's call this C plus D. So I use my opening balances and the amount that they have left over or used more for this year. So these two amounts added together. If I add those two amounts together, it will give me 138,800. He has two negative amounts, so it's a negative 7,750. And to compare, this is your balances in your general ledger accounts. It's your closing balances. Right, and then just to complete it, I recorded in the total of a year, 131,500. I had to subtract it because the ones are negative. And just to double check, if you add these two amounts together, it should give you that same answer. All right, grade 11s. So that is a comparison of your general ledger accounts and how it would be recorded in the notes to your financial statements. Hope it helped and good luck.